Good afternoon. I'd like to invite my guest, Chris Lundy, who's all the way from Virginia, USA, to talk about his experiences in crypto. He's a specialist, comes from the internet security background, but has been in crypto for a long time and advises on Crypto Roundtable and various others. And he's going to take us through his experiences in crypto, how he got in there. Welcome, Chris. Over to you. Good to see you. Hi.
Yeah, thank you for having me on, Mike. I appreciate it. For the audience, my name is Chris Lundy. I first entered the cryptocurrency space in 2020, but I've been aware of it since its inception, circa 2008, 2009 timeframe. And if we rewind back to those days, I was in my late 20s at the time. I was like 29, almost 30 years old at the time. And that was around the time that the so-called Great Financial Crisis happened in 2008, around that time frame. And I, at that point, became very aware of the importance of sound money. And I was looking very much into sound money principles. I was reading a lot of Mike Maloney. I was reading a lot of Ron Paul's work. I was looking into diverse economic opinions from the Austrian School of Economics and some other forms of economics as well, supply side economics, etc. And I took in as much information as I could to the point of where I realized that there was a problem with the monetary system and that if it wasn't solved soon, regular people were going to pay the price for it. So that was my motivation. It was like, I knew at that point, at that crash, that we weren't just dealing with a downturn. This was a generation shifting event that was going to have repercussions far beyond what we realized at that moment. And interesting story for the audience, in 2008, I was actually in Europe at the time for about a little less than a month. I traveled to Ireland in an effort to get a job in the university sector in central Dublin. I was interviewing with to go into library information technology services at University College Dublin and a few other spots. Trinity had interviews. All those interviews got canceled one day when I woke up, and I believe it was the finance minister of Ireland at the time, Brian Linehan, was featured on the cover of the Irish Times sometime in like late September, early October 2008. And I picked it up, and I was sitting there with my girlfriend at the time, who was from the Midlands of Ireland. And she said, "Christopher, look at this." And I opened it up. It's like, oh, great. All my job offers are going to vanish now. And sure enough, it hit Europe a lot harder than it hit the United States. And I was there to see very long lines of people, literally within days, queuing up for the dole. It was the most shocking transition of events in such a short space of time I think I've ever seen before. And that woke me up big time, because that's not something you see very much where I'm from in the United States. You don't, at least not even in major cities, you don't have queues that long. But most of the time when I saw it, it was not anywhere near as visible in terms of how quickly those types of crashes affect people. But in terms of crypto, I first heard about it in 2008. I was watching actually YouTube videos about how to mine Bitcoin. It was the only one at the time, at that time. And the reason why I didn't do it was because I discovered two things about Bitcoin I didn't like. And the first thing I didn't like about Bitcoin was the fact that it was a transparent protocol, which meant that it was nowhere near as private as cash, because it had no privacy. It was completely traceable. And there was also a lot of propaganda at the time in regards to digital currency. This cashless society talking point has been in the media for well over a generation. And now if we look at current events, we understand why that is. And as I became more and more acclimated to cryptocurrency technology and the use cases for mining, and I started seeing people getting financially successful from this and using it to actually purchase real world goods, establish real world businesses, and live within a circular economy completely outside of the fiat monetary system entirely. That's what got me motivated to say, okay, this is a legitimate innovation. I need to stop ignoring this at this point. Because even if it isn't private, these people are finding ways for it to become more privacy enhancing. They're clearly not having their financial assets stolen in any way. And they seem to be doing just fine. And this is kind of what I want from my life. It represented an opportunity to completely leave behind, any type of system that functions on corruption as a service, or fraud as a service, or blackmail as a service, like what we see in the world today. And that is the reason I think why everyone, not just your savvy, presumably young, financially well-versed person, would go after. This is something that applies to all people in all age groups. And unfortunately, it will mostly be most applicable and most resonating with the younger generations, because people generally, as they grow older, they have the resources that they have. They're comfortable with the things that they use. Elderly pensioners in the UK still use cash almost 100% of the time, because they understand the value of it, because they lived through World War II. They saw what London looked like when it was under Luftwaffe bombardment. So they knew the value of preserving their resources. But from a philosophical standpoint, everybody can get behind what this technology offers to people if used correctly, and with the appropriate safeguards in place for the individual.
So it all started in Ireland, but the ECB, they were particularly hard. I mean, a lot of money had gone into Ireland, hadn't it? And it inflated the economy. Yeah, that's really interesting. Yeah.
Well, Ireland benefited more than it lost in terms of its relationships with the EU. It would be argued that way, right? I disagree with this statement practically, because if you look at what happened in 2002, when Ireland had the euro introduced into its economy, instantly prices doubled across the board. Instantly, people weren't able to afford basic goods and services in the same type of way. Instantly, there was a hidden inflation tax imposed on the population overnight, and it was so it incensed people, many people, especially in the north of Ireland, to such an extent that they started to preserve their original Irish pound notes and coins, and they simply kept them and used them as currency, as a parallel economy, and that's still in place now. And they are looking really smart right about now, considering what's happening in the world. So the longer term viewpoint, whenever you look at those types of changes that are made domestically within Ireland's economy amongst its people, can be used as a model to say, if this works, crypto works in the same way, has the same functions, and is immutable like these notes and coins are. So that's really, I think, what appeals to a lot of people in Europe, because they've lived through far more hyperinflations than we have here in the United States.
Well, in Greece, they don't put their money in the banks anymore. They which doesn't do well in inflation. So,
I mean, look at how hard Greece got, completely destroyed in the 2008 crisis. I mean, it got destroyed so bad.
But it was 2014-15, I think, wasn't it, when the IMF went in and decided to change the rules, and all the ATMs were shut. And
it reminded me in a lot of ways of like what Gaza would be without bombs raining down on you, where nothing functions. It's like, there's no warfare happening above you, but everything around you is basically functioning as if a war just ended.
Well, England's becoming that way, actually, slowly but surely. Essential services are breaking down. I hate to say it. You will forever hear the broken country, but there you go.
Well, I would say that people in the UK or Britannia or Hibernia or etc., Ireland, whatever their names were in eons past, it was there then and it's here today. It's probably not going anywhere in the future either. So whenever we hear these sensationalized talking points from people in the establishment that may not have humanity's best interest at heart, pushing these narratives, they completely that they do not coalesce with reality in any way, shape, or form. So I think it's comforting to know that when you're on the right side of history, it's really just a matter of time more than anything else.
So, Chris, explain to people what you see as the benefits of cryptocurrency, and then we can go into the charts later. And you've been in it now a long time. What you can do for people advising on crypto, as I say, you speak once a week on the Crypto Roundtable. The key for a lot of people is that they don't necessarily understand it. I think that's the key. It's a market. So please explain to people in simple terms what it means.
Well, cryptocurrency is a compound word. Crypto means encrypted. Currency, in this case, would mean funds or money, fungible money, or something that can be used as a means of exchange. That's what it is at its basic definition. So how is that different from the money we use today? It's different and it's the same. It's both. So if you're looking at cryptocurrency versus cash, there aren't a lot of assets that are as good as cash in comparison to cash in the crypto space. The closest one would most likely be, in my opinion, Monero, which its ticker symbol is XMR. And that one and a few other privacy-based projects can function in a way as a digital form of cash, and that's its only real use case. But cryptocurrency started off as a different way to utilize money that did not require the approval of a central bank or a currency exchange mechanism authority or the Bank of International Settlements. They wanted to establish a network that was digital, like the current system is digital. Most of the money that you have in your bank account is not represented by an actual amount of cash that the bank owns. We don't have full reserve banking like we did in previous centuries. We have fractional, and in some cases even no reserve banking at commercial institutions that are deposit holders for people's funds. And that kind of counterparty risk with bank failures and runs on banks that we've seen over and over again for the last 2 decades, this system is failing. It's clearly demonstrated its failure. So cryptocurrency is both a reaction to the current, I would say, paradigm, but it's also been in the works for a very long period of time. I mean, this has been, what we understand of cryptocurrency today is, the people that started this have been working on it since at least the 1960s, and it didn't start getting serious until the 1980s. And that's when a lot of the technologies that underpinned the internet were invented, were in the 1980s, especially DNS. First went live in 1985, as an example. So as you track the innovation progress, then, okay, we've solved the money issue with Monero in theory. Let's say we have. What's the next problem to solve? Okay, it's going to be real world use cases such as contracts, or a real world use case like a place to put my files, storage, infrastructure. How can blockchain be utilized to put these things together? And there are many different projects that meet each of these use cases. For cloud computing, there's Flux. For decentralized media and gaming, you've got Theta and several other projects. For anything in relation to smart contracts as they were originally understood to be smart contracts, Ethereum was a huge pioneer in that when they first launched. And there are many. The market is replete with examples, but those are two or three prominent ones to mention. So in terms of what you can expect from the cryptocurrency space today versus what you could expect, I would say, when it first came around, it was essentially a test net that people who might be considered to be very technical or averse to contact with others, the typical technical computer type of person, it was internet money or a joke. I remember one time in an office betting pool, last place got 100 Bitcoin. So that's how undervalued of an asset this has been. So
it's basically a secure means of exchange.
Right. It's a secure, inviolable means of exchange, but you have to go through very specific security procedures to protect yourself. You can't just use the internet like you've always used it. Once
and it's also a store of value
internet,
now. It's an asset class that's a store of value as well. So
yeah, exactly. And the problem with having crypto right now as a store of value is that there's a volatility factor there. But that volatility factor has been in place ever since the gold and silver standards were done away with in the West. In the UK, it was done away with around the same time that it was done in the United States. It was, I believe, in the 1930s. 1933, when FDR signed the gold confiscation order. And
1933,
yeah. In 1931, I think the Bank of England did something similar, but I don't know exactly. I know more about the U.S. actions at that time.
So what created the crypto rush, as we call it, to create huge asset values and crypto millionaires? What prompted that?
Well, it's interesting when you look at the charts, because crypto's, since its inception, has gone through 4-year cycles of new investment followed by 90% drawdowns, new investment followed by similar drawdowns. So you have big movements in price up and down as more and more accumulation comes in. And you have to remember that crypto millionaires sold to people that bought higher, who are underwater on their investment. And that's one of the problems with the crypto space, is that it doesn't, the tide doesn't necessarily lift all ships unless you buy and just hold for a very long period of time, which is a valid way to do it if you wish to, but keep in mind that not all cryptocurrency projects survive that long.
But there's a limitation on supply, isn't there?
Not all projects have a limitation on supply. Bitcoin specifically has a limitation on supply. I believe it's a fixed supply of exactly 21 million coins, is my understanding. That's going to be the
so that will force price. I mean, that's the issue with gold. It's not, production of gold doesn't keep up with demand.
Right. Though gold has not functioned as a monetary metal for the average person as for as long as maybe 100 years ago or so.
No, I mean,
that was probably the last time it was really used. Yeah, but I think it's important to mention, because if you compare that with the current state of affairs with cryptocurrency in terms of where we were and how we got here, the rush to do it was a lot of people that were precious metals holders that got wiped out after the 2008 crash, instead of the price going up and then skyrocketing, which is what a lot of people expected, because it was clearly understood that the US was insolvent even then. The price actually went back down, and now we know through prosecutions that traders at trading desks from Goldman Sachs to JP Morgan were rigging the price, and now they're in jail. So a lot of those investors said, I'm sick of this. I need to shift some of my assets out of precious metals and into another sector. And they rightly identified crypto as the sector where those big gains need to be had. And a lot of those investors didn't just make back their losses. They grew their pots into something that was significantly larger than that of what their entire gold holdings would have been worth had they not sold anything. So it's about asset diversification. I think that's how any new industry gets going, is asset diversification. You realize that something serves an equivalent function to gold on this end of the spectrum. To, if you move a little bit over here, you got cash, and then over here you got cryptocurrency, and they all kind of line up within the same context. That means that you have ways to trade in between all three of them, right? And that's what you need in order for something to function as cash, is to interchange from that form into another form of money. So not all cryptocurrencies, as I mentioned earlier, are a fixed supply. Some are unlimited in supply. Ethereum is now proof of stake, so I don't think Ethereum has a fixed supply. Pretty sure it's unlimited. And then you've got other projects such as Theta, which is another layer 1 style network, which is equivalent to Theta, but preceded Theta by quite a while. or excuse me, Ethereum preceded Theta. But on Theta, you've got a much more unique structure where you have lower fees baked in. You have many different types of smart contract platforms. There's no censorship enabled on chain like there is on Ethereum. You have a lot of DRM, digital rights management style features, which is very good for artists if you're trying to distribute copyrighted works to people. They utilize things like non-fungible tokens, which can be used for keys to events or as identification to something, admittance to a private party, a receipt for the payment of a car, and it's all traceable on chain. So with these types of mechanisms, you can bring more accountability to supply chain. You can bring more accountability to the creation and the functioning of the money itself. And you can also bring accountability to who is receiving it, where, and when. And from a public function standpoint, if that's happening on the national level, that gives the people much more ease and capability to look at what the government is doing instead of having all that stuff, secreted away into some private island someplace. However, on the flip side, if you take many of the technologies in the space that are designed to surveil you and control you, such as WorldCoin, for example, another example, some other banker-style projects like SingularityNet, AGIX. I am not bullish on these projects at all. Yes, they have big money-making potential, but a lot of these projects are very much in line with World Economic Forum's talking points. And if you're a freedom-loving person, you don't want to be done in by this stuff. You need to be very careful where you're putting your money and your currency into, because that's energy. That's something you're feeding someone else with. And if you're going into those types of projects without doing your due diligence, there will be consequences for that lack of research. So I always encourage everyone to do their own research whenever you're choosing something to invest in, or even if you're just simply reading about it. Do not take endorsements at face value. Research it for yourself. And I've gotten out of many bad investments that way after I got recommendations for one project in particular called Proton, which is ticker symbol is XPR. I looked into it, and it's basically just a way to de-anonymize your identity and present it up as some sort of service that they're providing. It's like, why would I invest in this? And we look at the digital ID agenda rolling out that has first been in the public consciousness since at least 2019, but now it's being openly announced. So you need technologies to counter these things rather than give your money to invest in the projects that the establishment is using against the people to suppress their freedoms and remove their rights. So, I would say crypto is kind of like a battleground between different types of energies. It's so participatory that it does level the playing field on a longer term standpoint. But on the shorter term, it definitely creates friction with people that are accustomed to having monopolistic authority to do whatever they wanted for thousands of years. So what we're seeing is a fundamental rebalancing of human relationships between the powerful and those outside of the halls of power.
And how many Americans do you see have gone into the crypto space and use it as a means of exchange and a secure one? Because I think that's attractive to a lot of people, really, because we're constantly being monitored with what we do and what we don't do. And so how many Americans do you believe, in your experience, have gone into the crypto markets?
Well, first I'll speak to the number of people I've interacted with that have used crypto in this way personally. I've interacted easily with more than 100 different individual people that either utilize cryptocurrency as part of their business models, buy or sell products with it, or operate their businesses entirely using that just in one way or another over the course of the last 3 or 4 years. And that's just from efforts in the community and getting to know people. When I look at Ripple Labs put out a research paper, I believe it was in late 2021, where they predicted that by sometime between now and 2025, that approximately 45 to 50% of the entire investing public, or the public at large, would be cryptocurrency investors by 2025. I don't know where that sits today. If I had a chart, I could state it with more confidence. But I would, based upon the activity I see in the United States on exchanges, the amount of participation I see, there's significant participation. I'd say it's probably more than 5, maybe close to 10% of the population at this point that either currently owns or has owned crypto and is either in or out of the market. There's, I would say, tens of millions of people in the United States have utilized crypto in some way. It's more common than people realize, and not always fully represented by official statistics. Am I still coming through?
Yeah, no, you're coming through. I'll have to edit that bit out, but yes, you're coming through. No, that's really interesting. So this is, so there's a lot of people who want to get into crypto, like my daughter, for example, but they don't understand what to do. And I think it's just that simple explanation. When do you want to get into the charts, and how would you like to move on to that area space now, or what?
Yeah, I think it's good to move into the charts. Let's just start with a Bitcoin chart, and then I'll speak to some recent events, and then look at the price action to see where I see it going.
Okay, let me just get the charts up. So window, where is it? Oh, I missed it. Share. So hang on, I've missed it. Hang on. There's that up. No, it's not. I'll have to cut this out.
Okay.
There we go. That's the Bitcoin chart. And as we can see, in June 2023, it had been pretty steady. It had been low for a while, and then it took a big hike up from what was it, 105 to 330. What prompted that move?
This is Bitcoin Cash, not Bitcoin.
Yeah.
But Bitcoin Cash is actually up about 100% on the yearly chart. It's doubled in price overall this year.
Bitcoin Cash versus the dollar. Yeah, sorry.
Yeah. This isn't Bitcoin. This is Bitcoin Cash. But Bitcoin Cash is a fork of Bitcoin, and I believe it came out, as I recall, it's either 2017, 2018 timeframe. Maybe a little bit sooner than that. The problem with Bitcoin is that it has this function in it called replace by fee, and RBF is the acronym. And the problem with RBF is that no matter what fee you pay, there's no fee that you can truly use to guarantee that your transaction is actually going to be processed in the Bitcoin blockchain. Well, Bitcoin Cash solved that problem with larger blocks, faster block times, and a more reliable network with very low fees. And so if you want to make a microtransaction for $1, it's not going to cost you $20 to make that transaction like it can sometimes on the Bitcoin.
Oh, so that's the difference between Bitcoin and Bitcoin Cash. Okay.
Yeah, Bitcoin Cash is a completely different means of exchange. It's a fork of Bitcoin. It's a fork of Bitcoin's original code, but it does not follow Bitcoin's core code anymore. Right. It's a completely different project. It's an alternative.
So is that probably
an alternative Bitcoin investment?
Is that probably not the best chart to have up? Shall we do Ethereum or Litecoin?
No, we can do Bitcoin Cash. I mean, Bitcoin Cash is an important cryptocurrency. It exceeded $1,000 in price during the last bull run. So right. It's a highly desirable asset, in my opinion, if you're trying to add something to your portfolio. Right. But looking at the chart, where does this chart start? It starts towards the end of 2022. So this is the yearly from the beginning. So as we can see, around between June, around June 2023, we saw pretty consistent spikes to the upside from this asset. And if we're looking at the moving averages, they were trailing downwards and to the right. So we were in a sideways down consolidation pattern for most of the first part of this year. And the FTX collapse, as well as some other major bank failures, such as Silicon Valley Bank, created some liquidity issues within the cryptocurrency space, because many of these banks had counterparty risk issues with FTX. When FTX went under, a lot of other fiduciaries did as well. and that obviously created problems for liquidity inside of the crypto markets. There was large questions raised as to the solvency of many exchanges. Those questions are still being played out in court cases. So that has an inevitable impact on price, because you're only able to sell something if it is liquid, if there's a marketplace that you can actually sell it for something else of value, whether it's US dollars or something else, if you're selling it on an exchange rather than using it as a method of paying for something, as an example.
Right.
So, but yeah, in terms of the Ichimoku cloud, this asset broke out of it pretty decisively at that time, and the gap between the top of that cloud and the top of the charts didn't start to come back down to a narrowed edge, I would say, until maybe about a month later in late July. And once it touched that top part of the cloud, we see that the price started to drift downwards. And then ever since it got into that local bottom, it looks like around August 11th, August 12th time frame, that was the lowest point. That was about as far down as it went from its peak price this year, which looks to be around the 300 some odd dollar range, about 320, 330, something like this. So usually peak to trough with those types of corrections, we can see 50% corrections pretty easily. In this case, it looks to be around that. It went down to around $145, $150. So we saw that 50% correction in price, and then a pretty steady consolidation throughout the majority of the rest of the year. But if we're looking at the Ichimoku, we tested that to the upside starting in August, looks like about 3 or 4 times, until it started to break through and establish a new local channel. Now, I'm still seeing very much sideways action, but that sideways action isn't seeing bigger increases and decreases in price. Those waves are starting to get a little bit smaller on the daily charts, which indicates that all of the larger sell and buy orders above that narrow Bollinger Band appear to be shaken out of the market, which means that we aren't going to see huge declines in price to the downside short term. My concern right now is that we've already touched the top of that Ichimoku once, but that support's pretty strong and it was bought up very quickly. So that's the biggest risk to this particular asset, but is that you might see a drop down to like the $200 level if it's able to get back down below
there's a supply area at 172, 190.
That looks like the most reliable supply area.
Sorry, demand area.
If
it's going to return, it'll return to that demand area.
The demand area that low. That would be something to do on maybe a quad entry or a quad exit. I don't think that's a wise strategy if you're just going to bet on it going all the way back down to that state. Look at every single resistance pattern on the fib retrace from the peak to the trough, and then you can start to set short targets if you're going to short it, or you can set buy targets if you're dollar cost averaging in. So that's the bearish case. The bullish case is that it stays sideways and continues up, but I would expect probably
that's the demand area, isn't it? Really?
Yeah. The demand area is going to be down in that zone. Yeah. So if we get below the Ichimoku on the daily, let's say in about a week or two, we could see that demand area retested in between those two spots that you've got marked there. That's a pretty critical buy zone, and the next one above it is going to be, I would say, somewhere around the 190 area, and then again at the 207, 208 area. If you're tracing back up, that would be good. There's
a demand here as well at that area.
There's a demand area there. There's a demand area around the 225 area. That demand area is very narrow there. The longer a price is commanded within a demand area, the more reliable of a buy zone that tends to be. But you have to see where the buy orders are listed, generally in all of the charts on the market. I guess if you don't see a lot of movement there now, chances are it's going to be automated trading or wash trading that will bring it down to that level. And there's lots of automated trading that exists on cryptocurrency
Does the Bitcoin
exchanges.
Cash correlate with the Bitcoin chart?
No, it's a completely separate
Market. I understand, but
cryptocurrency
there's
market. Yeah, but I mean, you can do
is
ratio
a
charts of
correlation.
Bitcoin to Bitcoin Cash. I mean, if you want to find the correlation, you just you'll do a ratio chart of Bitcoin to Bitcoin Cash.
Right.
Or just look at that particular trading pair. If there's a trading pair for BTC BCH, and then you can see where your ratios are most favorable. Whenever Bitcoin buys you a lot of Bitcoin Cash, you shift Bitcoin into Bitcoin Cash. Or Bitcoin Cash buys you a lot of Bitcoin, you do the opposite. So.
Okay, let's have a look at Ethereum then.
Okay.
That looks a little bit more volatile there, doesn't it?
Indeed. Ethereum, well, let's see how far it went down from its peak. It went up to about 4,600 area, as I recall. And it corrected very significantly down to below $1,000 at one point. So we're looking at a minimum, of a minimum of a 65-70% retracement there. So that was a pretty decent crash. But keep in mind that that was the all-time high price for Ethereum. Anytime you're at an all-time high, the next thing you can expect in most markets is you'll get the all-time high test. You'll get a couple of retracements. You'll usually get 3 or 4 tests of it, and then the bottom falls out. It's usually like 5 points in an Elliott wave. That's usually what you're looking for, is that 5th point of the Elliott wave at the peak. That's when you want to start staggering your sell orders to get out. And as you can see, that's exactly what happened from that peak. You see staggered downward action with very few green candles, then it goes sideways, retests the 50% mark of that retracement, goes down again, and then retest the 50% mark of that subsequent retracement. So it's very reliable in terms of how those retracements come back into bearish corrections to the upside. Here. So with current prices, let's see where we are right now. So we saw a big green candle there. That's extremely bullish. It's the biggest distance it's been away from the bottom of the Ichimoku cloud since probably late September, something like that. So we're well, actually, is this a longer term chart? Oh yeah, this is like several years. Okay, so this is a different format.
This is a week, so I put it into the daily.
Yeah. Okay, there's the daily. Okay, yeah. So on the daily chart, that's a little bit more short term, but this is from the beginning of this year. We've got very steady upside action for Ethereum pretty much since the beginning of the year. It's been retesting previously reached retracements around the 50% level as previously referenced, and looks like it corrected back down roughly to the $1,500 area. That was a pretty solid demand zone, around $1,500 to $1,600 area for the majority of the year. And every dip into that demand area got bought very aggressively. So the trend there is anytime you see something that bottoms really aggressively and starts to go sideways, you're going to see your cloud descending. And then the more that cloud
that's quite an aggressive movement away, isn't it? It's
it is. And for it to stay that far above the cloud for that long is extremely bullish. That means that we've
testing this supply area here.
Yep.
But there is the next supply area is way up here, isn't it?
Yeah, so that resistance point has been touched 4 times, and it was touched once in that decline from the local high, and then it was tested to the upside 3 times, and it's still trying to break it. So if we're able to solidly get above, I would say 2150, we could see big moves up to 3,000. within the next couple of months, maybe 3, because there's not a
Yeah,
lot of
no,
resistance there.
there's a lot of open area here, isn't there? A lot of open
Yeah.
space up to this supply level.
Yeah, so of course I would need to look at the volume of the previous declines, but it looks like the demand areas from the retracement from the local high earlier in the year, it appears that this is still a good buy zone relative to that previous local high. So I would say if you're buying, don't buy as much, because you don't want to get caught in FOMO too much. FOMO is fear of missing out, or just buying pumps and chasing pumps. So a lot of people get completely wrecked and lose their shirt doing that. So I encourage people
I'd
not
buy on
to.
a retrace at this one. You'd buy on a
Yeah.
retracement, wouldn't you? You'd wait
Yeah,
for
you want to wait for a local retracement. But if we look at the stochastic RSI, it's way overbought right now. It's really strongly overbought. Yeah, and that's why those candles started narrowing out a little bit. So the RSI is a bit overbought, and just need to wait for that RSI to calm down around the mid range. Wait for a little bit of sideways action to come in, but it's a good time to dollar cost average. But anytime your stochastic RSI is that close to 100, you definitely want to be maybe putting 10% of your intended buy orders, maybe less than that, maybe more like 5% of your intended buy orders at that price. So if you want to buy some now, buy some, but don't buy very much. Wait until those prices retrace a little bit. And I would say the best target for retracement would be somewhere in about the $1,900 area, maybe $1,850. So,
yeah, I would about 1865 around there.
Yeah, right around there, at the point of control where that doji launched off.
Yeah.
Right around there.
Yeah.
So since we're at the top of that's I think is a reliable local trading range right now, and that's where I would be placing buy orders if I'm dollar cost averaging in. I just basically do a quad entry equally weighted across that price range, and I would do a fib retracement from the top to find out where I was going to place those orders. That's
how I'm going to change the thing now. I'll go back to the one we were at there. Sorry, that was, I think it was, okay. Okay, let's have a look at Litecoin here. Oh, there you go. Now, am I on the daily? Yeah, I am on the daily.
Yeah, we're on the daily on Litecoin.
Again, demand area down here, it's tested it once and it's sprung from there. Supply
it looks
area
like there were some accumulated buy orders that clearly got set off at that demand area you just pointed to, and ever since then we're up and to the right, and every channel has been easily cleared and we're above the cloud. So a lot of assets are above the cloud right now, and that's usually speaks to broader market strength and more market participation coming in. So my feeling is that institutions are buying right now at higher volume, because that's always what moves the market more than anything else. There's not enough retail participation to really move the market in meaningful ways yet. So, or to maintain stable prices at higher levels yet. That's why you have all these large drawdowns after bull runs come into play. But
that's right. That's your supply area there.
Yeah, so we've got some financing targets here. I would say around the $85 area if you're looking to sell. At this point, I don't see a lot of explosive movement on Litecoin to the upside right now. It is trading at buyable prices right now, in my opinion. It reached prices well in excess of $300. Excuse me, $250. Excuse me. In the last bull cycle, so it did not retrace anywhere near as much as some other assets did. That doesn't mean that it won't in the future, but something to note about Litecoin is it tends to, whenever it sees significant price movements to the upside, be the first mover that leads other cryptocurrencies in.
It leads other crypto, does it? Okay.
Yeah, it tends to be a leading indicator. Whenever you see this, whenever you tend to see a lot of price action to the upside or to the downside happen in Litecoin, and it happens before it happens to other assets, there's a very good, reliable way to predict price movements to the upside or to the downside. across the market generally, because Litecoin is better capitalized, and it's I would say Bitcoin Cash is comparable to Litecoin in a lot of ways in terms of how it's used and its speed. And people that like Bitcoin Cash would probably like Litecoin as well, I would say.
Okay. What would you recommend? I mean, I know you've done a bit of technical analysis, and I really appreciate that. It's, and I'm sure the audience will, because I think it's, what cryptocurrencies would you recommend? And let me just give you a bit of background of Chris, and we'll talk about this later. Chris does invest in Bitcoin, but very much, and he'll explain that, but on a longer term basis. But what particular currencies would you recommend, Chris?
Well, my the top recommended project I have to everybody, if you haven't invested in crypto at all, then the first thing you should buy, if you're buying to invest, is going to be Theta Network. Its ticker symbol is Theta. But if you're going to buy Theta, there's 3 cryptocurrencies you need to obtain: Theta, Theta Fuel, and Theta Drop. All 3 of them are on the Theta Network. Theta is an ownership token for the network. There are 1 billion fixed tokens. Theta Fuel is the payment and gas token of the network. It's how validators get paid for staking or providing staking services. It's how stakers get paid for their rewards. It is how gas fees are paid for transactions to be processed on the network, etc., etc. Theta Drop is a crypto that is the representation of the Theta Drop NFT marketplace on the Theta Network. And Web3 gaming is coming to Theta Drop. There are already projects being built on it that are being deployed as we speak. And Theta Drop has not really moved much in price. In fact, it's trading near all-time lows right now at 14/100ths of a cent US dollars. So it's a very attractive buy. I think its all-time high was around 6 cents. So even if you're looking at all-time high retracements, that's a very significant correction to the downside. And it's more than safe to buy at these levels if you're looking to buy for longer term. You can stake Theta, Theta Fuel, and Theta Drop. When you stake Theta Drop, you're rewarded with more Theta Drop. When you stake either Theta or T Fuel, you receive more Theta Fuel in this context. Theta Fuel, I believe, has about a 9.5% APR return based upon the nominal number of tokens staked. Your actual return will depend upon what the price was at the time of your entry. It can go down or up. So just keep that in mind.
How many cryptocurrencies are there now?
There's hundreds, maybe even thousands. I mean, in terms of ones that are actively used and traded, it's probably, I would, outside of, not including like very small exchanges or decentralized exchanges or, DeFi, I would say it's about a good 500 or so. But throughout the space, we're talking thousands upon thousands. I mean, there's projects that come and go.
Tradable ones and ones that you would buy, that's a limited number, correct?
I invest in less than 20 projects. Many of them I've divested from because of investor disrespect and trying to force behaviors on their investors, which I found to be very alarming. One of which is Sand, the Sandbox. They required all of the people that stake tokens to receive interest on their network to go through a know your customer procedure to essentially de-anonymize themselves and their assets. And I highly recommend that people don't do this. And the reason why is because exchanges get hacked all the time. And KYC, know your customer data, gets stolen all the time as well. And this is how hackers and thieves will target you to steal your crypto. And that's how a lot of people have been abducted in their homes and had their Bitcoin stolen or things of this nature. Privacy is extraordinarily important in the crypto space, in my opinion. And to have a project say, if you want to get any interest from your investment, you have to give up your personal details, I'm going to be divesting from them immediately. So that's a project I'm advising 100% divestment from as a matter of principle. Some things are more important than making money. I can make money with just about any crypto project out there. It's what does it do for me longer term? So it used to be in my portfolio because I found it to be an interesting metaverse project, and it ended up being just a trap for people's funds. And if I don't have control of my funds, they aren't mine as far as I'm concerned. Possession is 9/10 of the law, as they say in the United States. So in terms of my entire portfolio, I don't know every project I've invested in that off the top of my head. Many of them I've divested from, but some others that I'm very, very bullish on longer term include Monero. Monero is easy to mine. You can mine it with very low quality hardware. You can mine it with cellular phones. You can mine it with 20-year-old computers. You can mine it with anything that has the ability to run an operating system and that has memory, storage, all the necessary components. You can even run it using cloud instances if you want to mine it in that particular way. So there's lots of different ways to participate in the mining process. It's secure, it's encrypted. The blockchain itself isn't fully encrypted like some other blockchains are, but they are building quantum resistance into that blockchain. It's an ongoing project. There are some other privacy projects that claim to be quantum resistant. One of them is Pirate Chain. The Pirate Chain has had some issues with its blockchain and does not have a very robust team in comparison to Monero. So I think Monero is less risky, short and long term, than Pirate Chain would be. It's important to have projects in your portfolio that have three things: adoption, real world use cases, and that aren't scams. Those three things. That's what you want.
So say that again: adoption,
no scams. That was number 3. Oh goodness, I don't remember number 2.
Number 2 must be. It must have volume, isn't it? You need volume,
right? Yeah, you have to have volume. You have to have something that's actually fungible, something you can actually sell or buy.
You got to have it's got to have tradable volume. If a currency's got no volume, it's a bit like it's a bit like some of these new companies.
Pump and dump rug pull scams are actually so abundant in crypto that they enter and disappear from the marketplace at such a rate that it's almost impossible to keep up with it. And that's one of the reasons why I don't touch certain.
Is there a lot? So you can advise people on your experience in internet security, all of that stuff is so important, and data. You can advise people, and one thing that Chris can do is he talks a lot about crypto. He can advise, and if you need investment advice, Chris can give that. And you've been doing it a long time now in the crypto space, haven't you?
Well, I started as a investment advisor in 2021, 2022 timeframe.
Right.
To be frank, my returns have not been good because I chose a method that was less successful. I did not put in appropriate stop losses initially. I did not cash certain assets out when I probably should have. And there were some mistakes that I made. But what I learned from it is that even if you suffer a 90% drawdown in your assets, just focus on what performed the best in the drawdowns, invest more in those things, dollar cost average in, continue to stake, continue to dollar cost average at those bottomed out prices. Because even if you have a good project, even if you invested in the right stuff, you can still lose a lot of money. It's about the entry. It's always about your entry price.
Oh, it's about your entry. It's
always about your entry. And you must have, you don't just dollar cost average in endlessly. You need to dollar cost average out sometimes. That's called taking profit, for those that aren't familiar with dollar cost averaging concepts. But that's how I prefer to do it, is dollar cost average in and out, not just dollar cost average in and wait. Now, some projects I'm very bullish on long term, and I just don't want to cash them out at all. And Theta is one of them. That's one project I focus on as a source of income. And in fact, I've used it as a source of income to do everything from buy food, to pay my bills, to put gas in my vehicle, petrol, whatever. So there are so many ways that you can bring more passive income into your life that are simply not available in other industries or other sectors that you can gain access to in this space. But absolutely, Theta is my #1 project. If you invest in nothing else, invest in Theta. Yeah, I think you'll think.
So yeah, I can put when we sort of publish this recording, we can put these links for people, and also your link and how to get in touch with Chris. And also, you speak weekly. Just give us a bit of background on the crypto roundtable that you speak with a group of other people on which you send me the recordings every week, or you have done until recently. But
there's a weekly show on the Crypto Roundtable podcast. A friend of mine goes by the moniker Pirate J. He started this outfit a year or two ago, and asked me if I wanted to contribute to his show when he started the show. And when I had the time to do it, I started contributing. And we met each other in an unaffiliated investment community that's not affiliated with him, that we both joined on our own. And then we found out that we're both on the same side of the world. He's in Canada, I was in the US. And he wanted me to be a member of his team. And eventually, once the business starts to become, a money-producing business more formally, offer me a role in this way. So a lot of it is, just having something useful to do with my time for volunteering, with a longer-term view of being a part of this as it becomes a successful operation. Because many of the people involved in Crypto Roundtable had careers in finance, had careers in technology, had careers in health, had careers in many different genres of the global economy, and decided to go all in and focus almost exclusively on crypto. And that's something that I tried to do when I first went in, but I quickly realized that my trading skills were not good enough, and I needed to focus on what I was good at, which was longer term trades and dollar cost averaging, and taking profit or putting in stop losses, especially if you just made an entry. If you see a large decline in price of, say, more than 5 to 10%, get yourself some stop losses in there so you don't lose your shirt if there's a huge correction to the downside. So in terms of when you want to get into the market, this is probably the best time, because we're right at the end of the accumulation cycle. It's much easier to trade in an up market than it is in a sideways or down market. It's harder to make money.
So you think, that was our sort of third section. Give us your view on the future of crypto. What's going to happen? How do you see it? In the short term, it's a good buy to the upside, but the future of crypto, is it the future of our trading ability between us going forward?
I'd say that it's a component that will be used to enhance that tradability when used correctly. I'm going to give the optimistic use case, because I personally think that all these draconian efforts at implementing, Babylon via crypto are doomed to failure and have an expiration date. So I don't really pay attention to those projects, nor do I advise people to invest in them, because they're only successful if you give them permission, and you don't become rich by having your retinas scanned by some creepy individuals that want to sell that information to governments, and then they use it to spy on you. That's not investing. That's called something else entirely. I don't know what to call that. But that's sadly what the establishment is trying to present as crypto, in quotes, right now, and that's anything but that. But the agendas will be there, but also the counter agendas will be there. And cryptocurrency is essential for not just the functioning of trade, but almost every asset you can think about out there is going to be tokenized, and you're going to be able to trade it.
As you know, you and I think, well, sorry, I shouldn't say that, but we have similar thoughts. And the idea that you can trade, that's the key. And trade without interference and other people trying to control what you do. you know,
is
the
big
space, space for decentralized trading away from interference of others, third parties. And it's not just third parties anymore. It's fourth, fifth, sixth, and seventh parties that are benefiting from what the basic hard work of ordinary people. You know, it's incredible what's happened, I think, in the technology space, where you see more and more chaos of people making money without making money on the back of other people making money. And that's down to privacy and protection of data. I mean, I forever get, you know, on the computer, you're constantly finding people coming in and trying to, you know, you're never quite sure what you've clicked anymore, if you know what I mean. You've got to be very careful. If that's making sense. Am I making sense there?
Yeah, there are several concepts rolled together there, but let me see if I can unpack some of it. I think when it comes to trading, there's a difference between exchanging crypto for a good or service or exchanging crypto for other cryptos on a regulated or centrally managed exchange. The exchanges don't care about your privacy at all. They never have. They never will. One of the most privacy respecting centralized exchanges, KuCoin, out of nowhere, with I think it was like less than 3 weeks notice, informed all of its users that they're requiring mandatory know your customer procedures to operate on their exchange. And if you didn't go through it, then they wouldn't let you do anything other than withdraw your assets. And if they delisted your asset before you withdrew it, if you didn't withdraw it after X date, you get nothing. I looked at that and it's like, you know what, I don't trust centralized exchanges anymore. So I started focusing exclusively on 3 different areas to obtain or sell my crypto, buy or sell. And they are decentralized exchanges. And there are many different types of decentralized exchanges, whether they decentralized or peer-to-peer. The second is going to be cryptocurrency ATMs. And interestingly, most of the crypto that I obtained, I did through cryptocurrency ATMs. I just bought up to whatever the KYC limit was on the daily, and I just repeated that day after day until I got my stacks built to the appropriate levels. And those 2 methods are guaranteed ways to obtain your cryptocurrency privately, because most decentralized exchanges only require what's called a key store to access the exchange. You don't have to provide it with an email address or a phone number or any personal details. You simply authenticate with some type of public-private key algorithm, which is usually provided to you by that exchange. You enter your key store password and boom, you're in, just like that. And then you can start trading. And I think that's the future of trading, and a lot of liquidity is going to move into decentralized exchanges. If you're looking for a decentralized exchange project to invest in, look into Thorchain, ticker symbol RUNE. And I think that if you're a newcomer to crypto and you don't know what decentralized exchange is a good investment, I would say that's going to be a huge gainer and a very reliable place to trade for years to come.
Well, that's really interesting. Yeah, so thank you for unpacking that. I mean, it's we've had many discussions about centralized control versus decentralized, the ability to trade and on a decentralized system. So yeah. So Thor, Rune, RUNE, that's a good one.
Thorchain.
Yeah. Okay.
Yeah.
Brilliant.
If you want to go to the site, it's app.thorswap.finance. That's how you gain access to the decentralized exchange. There's plenty of videos on
if you could put in the links, we'll do that. When I publish this, I'll put up the links there.
We'll put it in the show notes.
Yeah.
Of course.
In the show notes, yeah.
Mm-hmm. Okay, so I think we went over all the prices for the 3 assets you wanted to look at. In terms of some other closing thoughts, I just wanted to let people know how they can get in touch with me. If you go onto Telegram and you do a search for Crypto Roundtable or CR, you can go to CR Lounge. That is the Crypto Roundtable Lounge on Telegram. I'll provide you with the link after the interview. We'll publish that in the show notes. I in that group, in that Telegram group, every Friday at around sometime between 3:30 to 4 o'clock p.m. Eastern time, we have the daily shows start around that time. I usually stay on for at least an hour for the first hour. It's about 2 hours long typically, every weekly show. And usually have 3 sections. We go through just general market talk. I usually have an economic outlook section where I just speak freely about the events of the previous weeks or months or years, whatever time frame I want to reference to the current interview. And then they'll go into technical analysis of several different picks. We'll gather some assets that we want to analyze before the show gets published. And then once we hit record, we'll go through them one at a time. So if you want to come on there, you can do that. You can also reach me directly on Telegram. I don't give my Telegram contact information out publicly at this time. But if you do wish to reach out, you can ask someone or directly message me inside of the Crypto Roundtable Lounge group, and I'm more than happy to interact with you there. I'm there very consistently. So that's the best place to find me, is the Crypto Roundtable Lounge on Telegram. And just a few other thoughts in terms of my personal journey with crypto and where I see it going in the future, just to speak to those questions with a little bit more detail.
I'm just going to put them back on the big screen there.
Okay.
Yeah. We've been on for over an hour, Chris.
Okay. Yeah. I wasn't sure when we were cutting off. Are we short on time, or can we keep going?
No. We've got plenty of time. It's just easy. So let's go. So I was just kind of changing the format and took the
chart away.
The chart away. So let's keep talking. I think I love listening to you and your experiences. So it's great. And I know you can be of a lot of help to a lot of people who want to get involved in crypto, because you're very knowledgeable about this particular sector. Yeah. So there you go.
And something else I wanted to say to the audience is that, what I see happening in the future is there's going to be a massive wealth transfer, and it's going to be from people that do not own cryptocurrencies to people that do. And that's really the bottom line, because it's that there are lots of different asset classes out there that I would consider to be immutable, like gold coins, silver coins, maybe to a certain extent platinum, precious metals in general, some base metals that are necessary for industry like copper. Some people consider silver to be industrial metal versus a monetary metal, but history has shown infinite times that it's been used as a monetary metal, as has gold. So in my opinion, from a silver standpoint, it serves both functions. So it's doubly as important. But if you move over into the cryptocurrency space, you've got an infrastructure that can be built on a very low cost basis compared to heavy industries like metals mining. You've got decentralized infrastructure that can use existing infrastructure rather than building out a completely different infrastructure from scratch. You can simply use what's already there. So instead of reinventing the wheel, it uses existing infrastructure, the cryptocurrency economy does, to remake how we're able to interact with each other. Already you've got blockchain-based games, blockchain-based privacy messaging applications. A couple of examples include, I believe Session is one of them. That's just one. There's others, but they escape me at the moment. You've got blockchain-based, real-time cloud infrastructure storage and deployment mechanisms. 2 of those projects include Internet Computer and Flux. Like Flux better of those 2. And whenever you look at the broader scope of what the market offers, if you have access to the right resources and you're getting passive income from them, and you see decent nominal gains from your initial investment, you can essentially live on the interest at some point. And that's how I prefer to invest, because that's how I would have invested 100 years ago. I would have been investing in like a savings and loan, or getting a fixed rate of my savings back consistently. But we don't have access to that type of a banking situation anymore, so we have to create it ourselves. And crypto has created it for us. It's here. It can be used today, not 10 years from now, but right now. And that's why the SEC is coming after crypto so hard, is because they realize that this is going to completely remove the ability of centralized governments to tell us what to do all the time, to take away our rights, or to destroy our freedoms, or destroy our very lives. They don't have that power anymore under this type of an infrastructure. It completely finishes it for them. And that's why we see more and more desperate actions in relation to specific nation state based actors or individuals, in terms of how they're trying to move the narrative away from things that need to be done towards things they want to do, right? So all we have to do is to vote with our feet, vote with our money, and vote with our conscience, and take responsibility for the actions, whether they're good or bad, or whether they're favorable or unfavorable. Learn from them and rinse and repeat. That's what this space has given me, is a platform to even come on to this interview in the first place. It's because I got into crypto that I joined Telegram. It's because I joined Telegram that I met Mike on this interview. It's because I met Mike on this interview that I got other types of relationships. It's it's a steady progression, and you have to start somewhere. And for me, crypto was the first step that led me into everything else that I'm doing right now. So,
what would you say the minimum investment to get started is in this market, crypto market?
Depends on which asset you're investing in, and depends on what your resources are, right? If you have no money to invest, the best way to invest in crypto is to get a computer and start mining a crypto that you want to own, and then accumulate it that way.
So you start mining Monero.
You can start mining Monero. You can start mining, anything that's a proof of work blockchain that you can mine on a standard computer. I think Monero is the best one, because that mining can't be tracked by anyone if it's behind a VPN, and if you're getting privacy coins, they don't know that you're receiving them, they being anybody that's trying to trace it. So I think that's an excellent one to mine. Also, you can download the Theta Edge node on Windows, and you can run Edge node jobs, and then those will be directed to a wallet on the Theta network that you can then send to another wallet on the Theta network that you create yourself, or you can swap them for another asset like Monero. So there are inexpensive ways to gain access to the markets, and that's not going to give you a substantial return. I mean, that's a very long-term type of thing, unless you have extensive amounts of infrastructure. But if you just want to do it as a hobby, that's how you enter.
So, but minimum investment would be
what?
But
minimum investment, I would say, if you want to make good money, you're going to want to invest somewhere between $1,000 to $10,000 minimum. That would be my overall recommendation if you're just starting out. I think a good midpoint would be somewhere in the middle of that range, between $4,000 to $6,000, and you can get more for your money now in this market at the end of an accumulation phase, after you've seen 95% plus drawdowns that you could at the top. So
and you have fees,
that amount of money.
Yeah. And if you do it for people, you obviously charge fees. I understand that. So.
Yeah. If anybody wants to go through a private arrangement with me to be their financial investor, we can negotiate the terms one-to-one. Typically, what I will do is I will say, okay, we'll agree on an investment amount. I take 10% of every trade. That's my policy personally, is at 10% of every trade, and then I'll just set the expectations in terms of how long follow-up communication needs to be. And then we can have meetings to go over the portfolio if you want. Other clients just want to say, here's X amount of money. Let's drink on it in 10 years. I have some clients that trust me that much. They're like, here's X amount of money. I'm like, wow, that's a decent amount of money. So because they know that I'm not, just going to take the money and run. I'm still in communication with these people, even if I've lost 90%. It's about integrity, And you build trust in the new economy through your integrity, by doing what you say you're going to do, and not just hiding behind a brand and saying, it's because I have this brand and I can do whatever I want. I don't want to be a banker. I don't want to be your banker. I don't want to be your customer. I don't want to be your service provider. I want to be a part of your life in a meaningful way. And I want you to be a part of my life in a meaningful way, as whether you want to call me a financial advisor or simply, a trusted person to come to, whether it's crypto or whether it's, the things that I've discovered about health or the things that I know about technology. I have many different ways of being able to guide you on your journey to getting well, to improving your wealth, and to operating in principle with what it is that you want to accomplish rather than simply what you've been accustomed to. And while I haven't seen...
That's what I've always appreciated about you, Chris, is honesty, because it's kind of embracing the areas where you haven't been successful, and people trust that. I do. I trust, and you've told me where you are successful and the areas that, and that in any kind of asset class, it's not always, it's not always an easy ride. And what I've loved about you is you're very direct, very open, and it is about honesty and integrity. And if people, I think that's something that's really, from my point of view, really appreciate in the relationship we've had. And I think it's, it's great. And your knowledge now in the crypto market is extensive. So
it's a good market to get into if you want to create a niche for yourself. If you're trying to change careers, if you're done with what you're doing, if you're not being treated well, what's the rule? Go where you're treated best, and go away from people that are treating you badly. Simple as that.
Well, Chris, I want to really thank you. I'm going to put up all these links today, but thank you very much. Let's end the recording now, and I want to say thank you very much for your time. Really appreciate it. Great listening to you, and great going through the markets. And I'm just going to end it. You don't have to go away immediately, so let me just find out where everything is. Oh, there you go.